Hello, my dear students. Today we are going to consider one more problem from retirement chapter, and this time this problem we are considering from NCERT book numerical question number 5, that is from old book. This is our problem. Here Digvijay, Brijesh and Prakash are partner in the profit sharing ratio 2:2:1, and their balance sheet as on 31st March 2007 was as follows here. Now this is the balance sheet, that is their old balance sheet at the time of retirement of the partner. Here the balance sheet, liability side, all unknown term, creditors 49,000, reserve 18,500, first partner that is Digvijay capital 82,000, Brajesh capital 60,000, Prakash capital 75,000, total of the liability side 2,85,000. Now exactly on the asset side, liquid asset that is cash 8,000, debtors 19,000, stock 42,000, building value 2,07,000, patent 9,000, and sum total of the asset side is 2,85,000. Now we'll see the additional information. Brajesh, that is the partner is the second partner, want to take the retirement as on 31st March 2007 under the following terms and condition. What are the term and condition? Number one, the goodwill of the firm was valued at rupees 70,000. This is the entire firm value of goodwill 70,000 and was not to appear in the books. So it is the rule as per accounting standard 26. No goodwill will raise in the books of the new firm except like purchase goodwill. Here the self-generated goodwill, so no question of raising the goodwill. If we want to raise the goodwill, that time the treatment will be different. Goodwill account debit to old partners capital account. So that entry also not required in these cases. Here we will pass that one entry related to retirement as well as same as change in profit sharing ratio, and that the entry is remaining partners to retiring. Remaining to retiring, student have to remember this like entry for all the time for treatment of goodwill remaining to retiring. Number one, under gaining ratio. Number two and number three, you have to follow in all balance sheet if there is any goodwill already appear or not. If appear, then you have to pass the elimination entry, and that the entry is all partners, that is including retiring partners capital account debit to goodwill account. Goodwill become 0 and partners capital will decrease. So this is all about the goodwill. Now here that is total firm goodwill 70,000. Out of 70,000, first of all our duty, we will calculate here how much amount will be the retiring partner share of goodwill. The 70,000 into like Bridges here it is 2/5. Actually ratio is there 2:2:1. So we can say Digvijay 2/5, Bridges also 2/5, and Prakash is 1/5. So Bridges is a retiring partner and his share of goodwill is coming 70,000 into 2/5. So if you calculate it, we are getting 28,000. So that is the retiring partners here. So retiring partners would get that benefit of 28,000 out of 70,000. Now how the benefit will be given here? Now remaining partner will give the benefits. Therefore the entry Digvijay capital account debit, Prakash capital account debit to Bridges capital, and that time you have to calculate under gaining ratio. So gaining ratio here it is like 2:2:1. So 2 is cancelled, so 2:1 it is coming gaining ratio, and that calculation directly you can show 28,000 into 2/3. That will be the share of Digvijay. It is coming 18667, and another that is like Prakash share it is 28,000 into 1/3. It is coming 9,333. There's some fraction amount is coming, so we can calculate that. It is not difficult. So ultimately we have to remember when total firm goodwill is there, out of the total firm goodwill, first we will calculate a retiring partner's share. So Bridges share is coming 70,000 into 2/5. So 2/5 means If you calculate, it is coming 28,000. After calculating retiring partner's share of goodwill, now we'll calculate who bear how much. For that, we need gaining ratio, and gaining ratio, it is very simple. We'll cancel on the retiring partner's share, and remaining partner will keep as a new ratio as well as gaining ratio. So here this is all about the goodwill. Now next one to very easy, like bad debt here 2000. So when bad debt arises, and we will write up that bad debt. Generally two entry bad debt account debit to debtors, and therefore closing entry profit and loss adjustment account debit to bad debt. So ultimately, profit and loss is nothing but the revaluation account debit to bad debt. Also you can pass, or you can write to debtors. Both are correct here, because bad debt cancel. Ultimate entry is that like revaluation account debit to debtors. So that is also correct, as always learner can follow any one. Both are correct here. So revaluation account debit to bad debt also you can write, or you can write here to debtors, as debtors value decreases. Now one more information, that is patent were considered as a valueless. So here earlier patent value is there. Patent value was 9,000 provided in the question. Now at the time of retirement, it is shown that there is no value coming into the zero. So patent value when came into the zero, ultimately asset value decreases, and we have to pass this entry like asset value decrease into revaluation account debit to patent. Now we'll see the solution next. Revaluation account. This is the solution here. Only two adjustments are there related to revaluation. Number one, bad debt. So bad debt or debtors also you can write here 2000 revaluation account debit to bad debt or to debtors. Again, revaluation account debit to patent. That is patent value decreases. It was the 9,000. So total debit side is 11,000. 11,000 debit side is heavier than the credit side. Ultimately loss arises, and that loss will distribute among the three partner, including retiring partner under the old ratio. So old ratio had 2:1:1. So therefore Digvijay share is coming 4,400. Brajesh share also same 4,400, and Prakash share also 2,200. So this is the loss, amount of loss on revaluation, which is distributed among the all partner, including retiring partners. Now after that, we will calculate how much amount will pay to the retiring partner. Here retiring partner Brajesh. So how much amount will payable to the Brajesh, that we have to calculate by opening partners capital account. Let's come to the partners capital account. This is the partners capital account number one. Like there are three partners. Shortly I denoted here Digvijay by D, like Brajesh B and Prakash B. Short like term we are using here. Opening balance provided here in the old balance sheet. Opening balance of the capital Y balance BD, like Digvijay 82,000, and here Brajesh 60,000, and Prakash 75,500. This was provided in the question. Now after that, this is the related to the goodwill. Already I told that the total amount of goodwill 70,000. Out of that, like Brajesh share 2/5 means 28,000. After that 28,000 we will distribute in their gaining ratio. And the gaining ratio, this is the Digvijay share 18,667, and this is the Prakash share 9,333. And the entry is there, the remaining partners to retiring partners. Remaining partners here, actually Digvijay is a remaining partners or gaining partner. He has gained that. Prakash also gaining partner or remaining partner. So therefore D or Digvijay capital account debit, Prakash capital account debit to Brajesh capital means to retiring. Now this is the amount of Digvijay share. This is the amount of Prakash share. And then we pass the contra entry, opposite entry. Here Digvijay, Prakash debit to Brajesh. So opposite entry by Digvijay by Prakash, and amount come on the Brajesh column. This is the contra entry, just like a cash deposit to the bank or cash withdraw from the bank. In case of cash book, we learned from class 11 how to pass the contra entry. The same way contra entry. Or if you cannot, then the option is there. The separately you have to do. First Digvijay to Brajesh, again by Digvijay Brajesh, again Prakash to Brajesh, again by Prakash Vijay column. Like that way you can, but we'll want to save the time, so therefore contra entry will use, and according to that basis this entry coming here. Goodwill treatment is over here. Now revaluation loss arises among the three partners that was being distributed. First partner 4400, second partner also same, third partner 2200, as per old ratio 2:1:1. So to revaluation, that is loss on revaluation, it was distributed or transferred to the all partner including retiring partner. When it is profit, that time by revaluation. So when it is loss, then this side, debit side, we know this. Now after that, undistributed, there is one undistributed profit is there. This is the undistributed profit, general reserve or reserve. So it was on the liability side. So all the liability side item generally coming on the credit side. Just a buy balance, BD opening balance, we are writing buy side. It was on the liability side. The same way undistributed profit is coming on the buy side, buy reserve fund or general reserve, and that is under old ratio. All the things are old ratio except the treatment of goodwill. This time here gaining ratio. In case of admission, sacrificing, and retirement or death, we'll use the gaining ratio. So this is the like primary posting. Now we can calculate the retiring partner benefits. Here this is the retiring partner Bridges. Total amount of the credit side coming 95,400. Now out of 95,400, here only 4,400 loss is there. So therefore 91,000 remaining balance which you have to transfer to Bridges loan. If nothing mentioned regarding the payment of retiring partner, then we have to transfer to respective loan account. And if mentioned that retiring partner payment made through cash, then to cash, or if payment made check, then to bank, or payment made through any other asset, so that time you have to write retiring partner to a respective asset. It may happen sometime payment made by like compound way, like some part is cash, some part is check, some part is asset, some part is loan. So that time you have to do like that way, to cash, to bank, to asset, after the remaining part loan to retiring partner loan. So that way also when that situation or that instruction will come, that time we will pass that entry. Here nothing mentioned, so here we will transfer to the loan account. After that, here we will calculate the remaining partners or gaining partner, those who will still want to continue their partnership business, their balance. So this balance here, it is coming credit side total 89,400, and debit side, and that is related to goodwill benefit as well as loss on revaluation. This goodwill benefit given to Bridges, so this will be minus. After that, it is current capital coming 66,333. Exactly, Prakash capital is coming here on that way, like credit minus debit, 66,667. Now that is the current balance. Now revised balance sheet, we will check the revised balance sheet. First of all, that liability side, here only two partners are there, so therefore Digvijay capital will have to write here 66,333. Prakash capital 67667, which we got from partners capital. Now this time Bridges is not at all remain a partner, so here Bridges amount, it is being transferred to his loan account, therefore we have to write Bridges loan. Here firm has taken loan, we have to think that Bridges gave loan to the firm, so therefore unless firm was not able to make the payment to Bridges loan, firm have to pay 6% rate of interest, that is per annum rate. How many months or how many days later payment will made, that amount of interest payable to the Bridges. So that calculation also sometime we can come, we'll calculate that. Now after that, creditors here as it is on the liability side 49,000 we are considering. So this side total of the balance sheet, liability side 2,74,000. Here in these cases cash remain unchanged in case of retirement because no cash outflow or inflow is there. Debtors balance here, it will be a little bit changes here. Bad debt arises newly, that is gross debtor 19,000, less bad debt 2,000 to 17,000, new good debtors came. Stock here 42,000, building 2,07,000, and total of the asset side 2,74,000. So this way, like we can see the balance sheet also. Now this is the way all the like accounts related to numerical problem 5, we can see again this problem. So this is the retirement, and like here if you want we can check also. So here retirement of a partner, there is a problem, NCT problem 5 related to balance sheet. Now that is adjustment, now revaluation, first ledger, partner's capital and balance sheet. Working verbally we did. Now if you need any working, we can do the working. So I think so it will be clear to our learner, and learner can do more numerical problem from our textbook and CRT book. Okay, thank you very much.